Hi, this is Lara at Forex Info USA with your free daily US dollar index Elliott wave analysis for the New York trading session dated Wednesday the 5th of May. And New York's been closed now, well, quite a long time, over 8 hours. So taking you first to a chart going back for the last 3 years on the dollar and having a look at these primary waves. We had a 5-wave down impulse to end a primary C wave, followed by a 1, 2, 3, 4, intermediate 5 or black to end primary 1, followed by an expanded flat correction A, B, C for a primary second wave, a really nice leading contracting diagonal in a wave 1 position that meets all of the classic textbook rules for a diagonal, which we don't always see, quite frankly, in the forex market with diagonals. A really nice expanded flat correction with a strong A and a B that reaches beyond the start of A, with a long strong C that reaches significantly beyond the end of A, as you would expect from an expanded flat. Thereafter, working on a primary third wave, and targets for the upside for this primary third wave still at 91.91 is where it will reach equality with primary 1. However, a more likely upside target for the dollar, about 102.87, and I've simply calculated that as 1.618, the length of this primary wave 1. And that's where that primary third wave will be 1.618, the length of 1. And using Fibonacci time relationships, it's probably going to get there about December this year, maybe August next year. So far, within this primary third wave, we're still on intermediate wave 1 with a 1, 2, 3, 4 still on this 5, probably getting closer towards the last part of it. Taking you now to a regular hourly chart where this primary 2 is this primary 2 down here. And here's our recent dollar rises with a 1, 2, 3, 4, still working on wave 5 up, probably an expanding ending diagonal, with a 1, 2, 3, and then after that, when that's finished, and it could be up a little bit further yet for the dollar, not that much further yet to go, it's an expiring trend. When this is over, we're going to have a 3-wave structure towards the downside that has to be longer and must reach down to 81.97 at least. And that's because wave 4 coming up, if this is an expanding diagonal, needs to be longer than 2. And it should be a 3-wave structure. It should look something like this. Thereafter, when that's over, further upside movement for the dollar and something that probably looks like this for a 5th wave to end that expanding ending diagonal, up to our targets about 84.82 when it's all over and done. I have taken a look back on an hourly chart for this piece of movement here, and although it is easiest on the daily chart to see it as an ABC 3-wave structure, it really is just as easy to see it as a 5-wave structure. So I'm just going to quickly flick over to an hourly chart back from the 25th of March to have a quick look at this. And here it is. Now at the time I had it as a 1, 2, 3, and I was expecting further upside movement, which we didn't quite get, but quite frankly it is just as easy to see it as a 1, 2, 3, 4 with a short 5. So this piece of movement here, 4, and this piece of movement here, 2, the labelling would be different to what we have here, but we would be seeing this piece here and this piece here as analogous wave degrees of this waves of the same degree, and that's entirely possible. And here would be the 3rd wave, the steepest part. Wave 3 would not be the shortest, and 4 doesn't go into 1, so all rules and guidelines would be met. So it is entirely possible, just taking you back, to see this piece of movement as either a 3 or a 5. It doesn't have to be seen as a 3. I say that now because it looks like with this very strong movement, unless we have quite a long 4th wave overlapping to the downside that's longer than this 2, it's going to be entirely possible to see this as a 1, 2, 3, 4, 5, a regular impulse to the upside to end wave 5 blue and wave 1 black. So taking you now to an hourly chart where this A, B and C up here is this A, B and C up here, and we see some reasonable Fibonacci relationships within this last piece of upside movement. We see wave C may be just short of 1.618, the length of wave A, and between this 1, 3 and 5. Wave 3 is just 0.1 less than 1.382 the length of this wave 1, and wave 5 is a very nice just 0.03 less than 0.382 the length of this wave 3. So some fairly adequate Fibonacci relationships, along with some divergence between price trending up and MACD now trending down, and we may very well be seeing the end to this wave C. If it does push up a little bit further, that certainly is possible, and it probably won't go much further. It would be nice to see it reach up to 84.37, which would give this a much nicer relationship between A, B and C. So if we do have any further upside momentum from the dollar, it's probably going to be pretty shallow compared to what's happened. That momentum to the upside is waning. We're due for a bounce and an exaggerated three-wave movement to the downside. It may still be an expanding ending diagonal, but I want the wave count to show me that, with some strong movement at least down to 81.98 for that diagonal scenario to be valid. Otherwise, it's entirely possible it's simply a 5-wave impulse to the upside to end that intermediate wave 1. That's all for me today with your dollar analysis. I won't be doing it tomorrow because there may be waves and I'd rather be surfing. So that's all for me today with your dollar analysis. I hope everyone's having an awesome day out there, and may all our trades be profitable.